Morning to you, Mike. What are we worried about this morning?
What's that again? Sorry?
What are we worried about this morning?
Well, we're worried about, let's see, interest rates maybe in the States going up soon, and just the fact that this market has gone up too far too fast in such short time that a lot of investors are saying could be at a peak and in the near term could see some profit taking. But we do have a deal to tell you about this morning. It involves General Motors and the widely anticipated sale of its European operations. The Opel brand. It has owned this brand for about 90 years, but over the past 20 years, Opel's been a money loser for General Motors, so it is cutting ties. It is selling it to Peugeot for an estimated $2.3 billion, plus GM will pick up some pension obligations, and a little bit of that money will go back to shareholders in the form of a stock buyback. So GM pulling back a little bit in Europe, but at the same time says, look, it's still got Chevrolet, it's still got Cadillac for sale there, and those brands are doing just fine. But you've got, again, a little bit of some moving pieces in the automotive industry, as there has also been talk that General Motors could be looking at closer ties to maybe one of the other Detroit three. Of course, Fiat Chrysler has made some overtures to maybe do a merger at some point with General Motors. Nothing going on there, at least not right now, but you never know going forward. The other deal that likely won't happen, at least according to City Hall, is the sale of Toronto Hydro to Hydro One. Reuters had a story from unnamed sources saying that Hydro One was in talks, preliminary at least, to buy Toronto Hydro for an estimated $3 billion. Now, obviously, that could raise a lot of much needed money for the city for other infrastructure projects. But City Hall and Mayor John Tory putting out a statement over the weekend saying no truth to the rumor, not for sale. But invariably, these things do have market implications, considering the fact now, of course, that Hydro One is a publicly traded company. So we'll track the stock coming up today at the TSX. Friday last week, we saw those eye-popping Toronto real estate numbers, with the average price now of certain properties well north of $1 million. For example, the 905, the average for a detached home now above that $1 million threshold for the first time ever. Royal LePage, though, in with a study this morning about how a $1 million home used to be the be-all and end-all, and the basically millionaires club. It's not what it used to be, of course. You look across the country, and Toronto and Vancouver still well north of the $1 million price point. Halifax and other cities across the country, Calgary and Edmonton and Winnipeg, you can buy much larger properties, obviously, so much diversity in the price points across the country for the Canadian real estate market, and that's something that the Bank of Canada obviously has to keep an eye on as well, as our central bank has talked recently about, well, not doing anything with interest rates because they still see a lot of weakness within the Canadian economy. That is a very different signal, though, that we're getting out of the United States right now, where the U.S. Central Bank, the Bank of Canada's counterpart, has been talking consistently about raising interest rates. And that's something we'll be paying close attention to this week, as we'll get some key economic statistics from both Canada and the U.S., which could show still momentum to the upside for both economies, but more so to our American cousins, and that could set the stage for an interest rate hike coming up middle of this month. Net result from that, we've seen the Canadian dollar drop. Last week, it was down 2 cents against the U.S. dollar. Opens this morning well below 75 cents, and the exchange rate pretty expensive to go to the United States at $1.34. Having said that, with Canada's 150th anniversary celebrations this year, and Toronto celebrating anniversaries and tourism dollars coming into the city, this could be a big year for Canadian travel simply because of the favorable exchange rate coming into our country. We'll also be looking at today, Snap Inc., day 3 of trading for the app developer, which debuted Thursday last week at $17 a share, promptly closed Friday above 27, now worth $32 billion in the early trade this morning, worth even more than that, signaled up by yet another $1 billion in market valuation for Snap Inc. as investors continue to snap up that stock.